From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney, along with my twin here.
Yes, the Golden Girls, as we just got called by our editor. I'm Juliet Sarli. This was not planned, but this is what happens when you work very closely with someone, isn't it? You do get into sync a little bit.
I think we do. I think we are in sync. But hey, look, bringing a bit of brightness to what's been a pretty dreary day, if we're honest, on markets. I never like to undersell what we do here. We don't want people turning off or leaving us because they think nothing's happening. It's always of interest, but yeah, it's just been one of those afternoons.
Yeah, I mean, I think what's interesting is that the Middle East worries, of course, weighing into a lot of market sentiment, also positioning ahead of non-farm payrolls tonight. But we do have that big spike in crude, which kind of buffered our market a little bit from what could have potentially been a worse day. We dropped by about 1.2% on the open, down 0.75% or thereabouts on the close on the CBO 200, and that's mainly due to the spike in oil really lifting those energy players.
Yeah, you can see not a lot of movement in this afternoon hour, because you think that we're headed into a weekend where anything could happen in the Middle East, like anything really. We've got the U.S. non-farm payroll report tonight, and then of course we've got a public holiday in New South Wales. So we will be here, of course, with you on Monday. Markets are still trading, but it does take a little bit. I mean, it's been a bit quiet around the city, if we're honest, this afternoon.
Yeah, absolutely. I think that ausbiz is one of the few offices working, but we have had a good day. Let's have a look at our themes, and we mentioned a bit of a flight to safety today. Gold is the colour of the day, but that big move in oil, and that's interesting because it wasn't just, I mean, it is all related to the Middle East, but sort of what President Biden had said as well about the fact that they were discussing whether they would support the Israel incursion into those Iranian oil facilities, also giving that 5% boost to Brent overnight. And then, yeah, we talked about non-farm payrolls. I think the unemployment rate expected to stay at 4.2%.
Yeah, so lots for market participants to digest. Energy, as again, some are calling it an offhand comment by the U.S. President Joe Biden, but did say that the U.S. is in discussion, that's the quote, about the possibility that Israel might attack Iran's oil fields. So Cooper Energy, the exception to the rule there. Miners coming under pressure.
Yeah, and I think that, I mean, there's a lot of reasons, but I think what was really interesting was this big, bold call from Nomura as well. I mean, you've mentioned the copper price movement there too. But Nomura saying, look, what we've seen in the Chinese stock rally, with remembering that it's been closed for most of the week with Golden Week, but on Monday you had that huge rally into a bull market territory. Is this overpriced? Is it going to be a boom and bust? Are we going to see similar to what we saw in 2015, and a lot of weakness coming through in a lot of China-related stocks, Treasury Wine Estates, A2 Milk, and the big miners, of course, as well.
Yeah, there's never one-way traffic, and yeah, there's still a lot of unanswered questions about how that Chinese stimulus story will play out. A lot of enthusiasm this time last week. BHP snapping that 3-week winning streak, as has the market overall. And we've seen tech stocks tracking Wall Street lower to record their worst week in about a month. You can see there, NextDC is the exception. It ended the day up 1% higher for those of you listening in podcast form, 1% higher for NextDC, but the likes of Zipco down by close to 3%.
Yep. Okay, let's have a look at some of the corporate stories. Platinum and Regal entering into this non-exclusive mutual due diligence period. So basically, Platinum is letting Regal look at its books, but it is open to a third-party offer as well. Platinum up by 0.4%, Regal Partners down 1/3%.
Yeah, Regal Partners also updating on its funds under management, saying they rose to $17.2 billion in the September quarter. Origin Energy has confirmed that its APLNG project has received a price review notice from Sinopec, so any new contracts, I believe, will be taking place in the first quarter of 2025.
A broker upgrade for Cochlear from Citi on its sustained pace of growth, sending Cochlear up 1.5%. I think they had a $305 price target or something like that.
Yeah, HMC Capital is gaining on a potential data center acquisition or two. So yeah, sending its shares up. People love that data center thematic right now.
And JP Morgan becoming a substantial shareholder in Star Entertainment with a 5.47% voting power. That sent Star shares up by about 3%.
Or 1 cent. It's been such a story. This time last week, Juliet, I think he'd left by the end of the day last week. It was down by 50% when it came back online. after being suspended for that extended time and posting its results. ANZ will pay a combined sum of 99 million Australian dollars for the settlement of 2 class actions that were brought against it in 2020. Insignia also updating the market in the wake of the settlement of that class action as well.
All right, and Magellan Financial Group saying total funds under manager 38 billion in September as they experienced net outflows of 200. What is that? 0.2 of a billion. What is that? 200 million? Let's get to somebody who knows maths better than me and economics and all of the important things. Shane Oliver is our guest, chief economist at AMP. Not wearing yellow, Shane, but we'll forgive you. Welcome to the Golden Girls. What a week. And I was just reading your view as well, or your weekly note. A lot in terms of investor sentiment is really going to rest on what happens between Iran and Israel.
That's right. We can all say what we want at present, but in the short term, the big issue is what happens, in particular, how Israel responds to the attacks by Iran. Oil prices have gone up a little bit, but not dramatically so. In the context of history, it's a non-event so far. Shouldn't really have a big impact on motorists. But obviously, if in the next few days you see a major escalation where Israel attacks Iranian oil production facilities or Iranian oil export facilities or their nuclear facilities, and then Iran responds by attacking oil production or oil transport facilities out of the Gulf, then you'll see a major impact on oil prices. And you can quite easily see a spike in the oil price, well above $100 a barrel, potentially as high as we saw at the time of the Ukraine crisis back, it's still going, but the initial invasion back in 2022, when West Texas got as high as, I think, about $120, $130 a barrel. So, and of course, the risk could go beyond that. So it depends on how far this goes. If you think about the Strait of Hormuz, something like 20% of global oil supply goes through that strait every day. And so if it is cut by Iran, then that has a major impact. So that's going to be the key thing to watch in the short term. Of course, if Israel holds back and doesn't undertake a major attack on Iran, acts proportionately, then the impact will be far more contained. And of course, this time next week, we'll go back to focusing more on other things.
Yeah.
Payrolls did and so on.
Yeah, payrolls, rates, all the rest of it. But just to flesh that out a little bit. So are you thinking about the impact to global growth primarily? Are you thinking about the impact of oil prices, rising oil prices when it comes to the inflation story? Like, what is it as investors that we should be on alert for?
Well, it's all of those things. As the oil price goes up, it does boost inflation, but I wouldn't get too hung up on that because it also acts as a tax on spending. So as oil prices go up, you get a direct boost to inflation. Central banks will look through that. They'll focus on core inflation in other countries. In Australia, they'll focus on the underlying measure of inflation. Will there be a flow-on impact to broader inflation? I'd probably tend to think not, because growth is already slowing down and weak in some countries. You get a big increase in petrol prices, in oil prices. Gas prices would probably flow through on the back of that. That would mean less scope to spend. And less demand elsewhere in the economy. And so the overall boost to inflation, I think underlying inflation would be non-existent or could actually work the other way. So the bigger impact would be the negative impact on economic growth. And if you go back through history, when we have seen these oil shocks in the 70s, obviously, 73, 79, zip forward to the invasion of Kuwait, Iraqi invasion of Kuwait in 1990, those sorts of things do tend to result in spikes in the oil price, which then have tended to be associated with subsequent recession. So that's the real risk here, that it causes a shock, which ultimately brings on a much weaker downturn than we're currently expecting globally.
What does all of this mean for our market, Shane, in terms of returns, and also putting into context what's been happening with the China stimulus?
Well, you've got to put it all in context. Like our market, when I last looked, was down about 0.7% this week. So you could argue, well, not a big event in the great scheme of things, but of course we're still waiting to see what happens in relation to Israel and Iran. Obviously, there's a bunch of positive things going on. We're seeing inflation and interest rates fall around the world. Most recently, the numbers out of Europe were pretty good. Europe seems open to an October rate cut. European Central Bank, the British Central Bank, the BOE, talking about more aggressive rate cuts ahead. There's more rate cuts coming out of the US. So all of those things are positive, and I think Australia is heading in the same direction. That is a very, very positive backdrop because we've been able to get inflation down without causing major mayhem globally, at least so far. And then you add in the Chinese stimulus. That's a pretty positive story for markets, assuming we get through the situation in the Middle East in reasonable shape. And history tells us that US shares, Australian shares, rally on after the first Fed rate cut after a tightening cycle, providing, of course, we avoid recession. So if that's the case, both in Australia and the US, then shares are in for a reasonable ride. That chart there shows the impact on Australian shares over 3 months, 6 months, 12 months after the first Fed rate cut in an easing cycle. And you can see I've highlighted the recession years in red, but if you don't get recession, odds are the share market will rise. So, just looking at history would suggest that we are in for a reasonable ride for share markets over the next 6 to 12 months, providing we avoid recession, which is our base case. But that still doesn't preclude volatility in the short term, obviously, given those geopolitical threats and obviously worries along the way that we might still have a recession.
Yeah, and I read your note in detail every week, and part of it is because I like to sense the shift in tone coming from you, Shane. And you do say that the next 12 months are likely to be more constrained and rougher compared to 2023, 2024. So you say it all hinges on that risk of recession, whatever that is inspired by, be that Middle East or beyond. So what do we watch out for next week to help inform our view?
Well, next week locally is a little bit quieter. We've got the minutes from the Reserve Bank, which should be a non-event. We should know exactly what's in the minutes, but they always manage to surprise a little bit. But I think it's going to indicate more caution on the part of the Reserve Bank. Similarly, comments by Deputy Reserve Bank Governor Andrew Hawser on the same day, I think Tuesday. Sarah Hunter speaks on the Thursday. Interestingly, at a panel that I'll be at. So we're both speaking, but I think people will listen to Sarah a lot more than they'll listen to me. But I think the message out of the RBA will remain cautious. We do have some data on consumer and business confidence, but I suspect that they will say the same things. Consumer confidence remains low and business conditions are softening in Australia. Then, of course, we go global, putting aside what happens in the Middle East. The big one next week in the US will be inflation numbers. It seems these things come around real quick. It's partly because you've got two goes at inflation in the US. You've got the CPI for September, and then, of course, last Friday night we got the core PCE, private final consumption deflator numbers. That core, the CPI numbers, I think will be reasonably positive. We'll probably see another leg down in the headline rate of inflation. We did see lower petrol prices through September in the US, or gasoline prices as they call them. They'll probably be down, and that'll bring down inflation as measured by the CPI a notch further. But the core rate will probably stay at 3.2%, even though we'll get a relatively low monthly read on core inflation. The funny thing to observe about that core rate of inflation in the US at 3.2% is that last week we heard that core inflation, or trim mean inflation rather, in Australia was 3.4%. So we're not that different to the US. A lot of people keep saying we are different to the US, but in reality, we're only 0.2% above where they were. And if you allow for, a 3-month lag, because I think we are lagging the US by about 3 to 6 months, we're about where they were 3 months ago, around 3.4%. So in the great scheme of things, I think we're just lagging the US on inflation. We're not different. And that will ultimately mean the Reserve Bank will cut interest rates, and there's still that chance, a reasonably high chance they could cut rates by year end, even though our base case is February next year.
Now, Shane, just on something a little bit lighter, I've been noticing your team is getting really into TikTok. I saw you even having a go on LinkedIn, but Mibui, gosh, she's good. She did a really interesting one about the change of time and the impact of productivity when we move the clocks forward this weekend.
That's right. yeah, the video thing is really taken off. I think it's not just on LinkedIn; it's also on Twitter. You can see it on X and TikTok. And
yep. You're TikTok famous now, is what my kids say, Shane. So
not famous. Yeah. That's a good thing or a bad thing? But,
I have no idea.
I think I started on it because it was the big thing to be on, or Twitter, and then of course it morphs over time from one thing to another. Yes, we do have the change in time. I always find the change into daylight saving a bit discombobulating because you lose an hour. You think you're getting up at 8 a.m. on Sunday morning, but it's actually 7 a.m. That can knock people off a little bit. I think what me did find was that volatility tends to spike around the change. It's very hard to explain what volatility in share markets, why that may occur. It may just be the time of the year, because in Australia anyway, and September, the changes from daylight saving out of it in the US into it in Australia is often associated with volatility in share markets. Even you could argue before daylight saving was invented in the 60s and 70s in Australia, and so you're in a seasonally more volatile time of the year. But it could be because people get confused by the change in time, and that could lead to different psychology when you come to share market. I recall when daylight saving started, I was telling me that you've got to be careful here because the farmers might complain. Many farmers still hate the concept of daylight saving because the cows always come in at the same time. I always thought, well, what difference? They could still operate on the basis of standard time rather than daylight saving time. The other big economic impact that I always thought of was people with their blinds. I remember when it was introduced in the early 70s, people saying, well, that's going to destroy the blinds because we always close the blinds at 5 p.m. or 6 p.m. or something. Now we're going to get an hour of extra sun in the summer, so that'll ruin our blinds. Of course, makers were quite happy with that. But, maybe there's an economic impact. Of course, at the end of the day, we'll go through this and we'll probably forget about it another week. But we are coming through the change of time, and that can have some impact on markets and our psychology.
Yeah.
To be honest with you, I'll be quite happy.
I'll be happy too. I think my grandma was one of those blind people. No, she wasn't blind. One of those people on that blind train. Shane, have a great weekend. Chief economist at AMP.
Okay, take care.
Oh, good stuff. All right. We should review our stock of the day, which was Regal Partners, Mark Gardner, MPC Markets, and Adam Dawes from Shaw and Partners. Let's take a listen.
Regal and GQG are the only two fund managers we're remotely considering at the moment, and apart from the fact they've done pretty well, they've been the ones that have been attracting all the inflows. So, they'd be the only two I'd be considering really. And as I said, Regal's doing a little bit of that roll up, and I think they'll probably. It will benefit them I think it benefits both parties as a pair.
I'll stick with a buy on Regal. I think that, as totally what Marcus said, you've got to look at inflows, and there's only two of them that are getting inflows at the moment, and we really need to basically, that's where you want to be putting your money if you are doing it. Be careful, obviously there's a fair bit of money that needs to be paid out, and so that's going to keep the Regal share price pretty flatlined. But over time, as more fund gets managed and gets put on, I think these guys will do pretty well.
All right, let's take a look at the market leaders on a down day. Light and Wonder. Now, it's going ahead with one of its games, which me not being a gamer forgets the name of now.
Yeah, I have it here. So it is Dragon Train. So it had a bit of an update in terms of litigation. It was also out with its third quarter, or announcing that it will be out with its third quarter results on November 12th. So we'll keep our eye out for that one.
And Strike Energy, of course, moving into that overall energy theme. Star Entertainment we touched on as well with that JP Morgan bid, I guess, or buying into Star.
Yeah, and Viva Energy, Macquarie is keeping it as an outperform, even while it expects some earnings pressure coming through. On the flip side, Liontown Resources, it is online and it is down by 4.5%. Neuron Pharmaceuticals, Pilbara, APA, I can't see any news, but those are, reflective of just some of the risk-off sentiment out there in the market in general.
Let's have a look at the smaller end of town. Kinetico Energy, I mean, again, the energy story. Sinlay Milk is an interesting one. Up 7.3% on a day when A2 milk went lower.
Interesting. Yeah, okay. EZZ Life Sciences, or EZZ, I don't know what we say. It's up on No News. And when you get to some of those losers, 4D Medical, correct me if I'm wrong, but it did have some news out yesterday. Airtasker as well, both of those companies, well, 4D Medical down by 9.5%, Airtasker off by nearly 8%.
I'll be helping them out on the weekend. I need some pictures hung.
Yeah, they're really good for that, actually.
Good. All right, tonight, of course, the big one, non-farm payrolls. John Williams speaking. Austin Goolsby's comments last night were interesting. And Chinese markets, of course, today were still closed for Golden Week.
Yeah, so market forecast is for a gain of 150,000 jobs in the United States. And getting to the week ahead here locally, well, we just heard it from Shane Oliver, didn't we? RBA meeting minutes, we get the Melbourne Institute inflation gauge, business survey from NAB, and ANZ job ads, along with the monthly consumer confidence read that comes from Westpac.
All right. Globally, we've got the Fed meeting minutes, PPI, CPI, consumer credit, and the RBNZ expected to cut rates. All right, bringing it back to the local market, a down day, as we mentioned, 0.7% on the CBO 200 and snapping on the ASX 200, that 3-week rally as we continue to monitor tensions in the Middle East.
Yeah, for the week, down by 0.75%. So we'll keep our ears and eyes out for that US non-farm jobs report tonight. We'll be sending our weekend newsletter to you. It's called the OTC. If you're not a subscriber, you should look into being so. We just sort of compile some of our best interviews of the week and some of the key themes of the week as well.
Yeah, and we ask one of our staff members every week to tell us what they're watching, reading, looking out for. Today it was intern Matt's turn.
Ooh, intern Matt.
Intern Matt's got something for you to listen out for over the weekend. All right, have a great weekend.
We'll see you on Monday.